All right, everybody. Good afternoon. This is Doc Severson, and I've got Dave Lukas here of 12-Minute Trading. Today is Monday, the 10th of April. Markets are rocking again, and we've just come off of a 3-day weekend where we had the jobs report was announced with basically a shut market. So all we had about an hour of the futures Globex market open on Friday to kind of price in that risk, and it really didn't do much. It sort of gave it back. And so here we are today. We are just kind of flat for the day, approaching the next big pivot, which could be CPI coming on Wednesday. Dave, what are you seeing in this market these days?
You know, it was interesting to see the futures gap higher on Friday. And then today we come into this morning's open and we're tanking essentially, right? Everybody, was looking at it. You got I think at one point the NDX was down almost 200 points. The Dow was down 100 and some, and the S&P was down over 30. And now we bought the dip and come back up. You and I have been saying, and this is very antithesis to what's out there. It's really, being contrarian that this market wants to go higher. And that may be short-lived, right? It may only happen for another month or so. But in the meantime, it just seems like this market wants to go higher. And lo and behold, right, about noon today, the dip started getting bought. And I was looking for news and stuff around. It wasn't anything. I mean, we have China circling Taiwan with warships. We've got, just about all the things that you can think of that should derail a market or give market uncertainty and cause it to, sell off. And we're not seeing that. I mean, even the 80% chance now the Fed hikes rates again in 6 weeks, right? Or 3 weeks, or I think it is. So it's interesting. This market seems to want to plow higher. It seems to defy that logic, but that's what markets do. They typically will go the opposite way that everybody thinks they will go because everybody's positioned on the wrong side, right? And so maybe we're seeing the beginning of that. Maybe we're seeing, the beginning of kind of a nice run, maybe a weekly swing as we get into the charts. We'll talk about that. Maybe a weekly swing higher that leads us into, I think, the debt ceiling debate into early June, and maybe we get that sell in May and go away. So that's kind of how I'm looking at it right now.
I was thinking today I wanted to talk about a little bit of a historical perspective, or I guess the progression that I went through when I got into this business. So the very first thing that I did when I was still working at my W-2 job and was learning this stuff, and I was just rabid about the market. I was like, I've got to do whatever I can to trade for a living, right? And so I would take holidays that still had an open market at typically something around Christmas or Thanksgiving, where I could, work from home, you know how that is, right? So I would just load up the kitchen table with monitors and get everything set up. And it was like, all right, I'm going to trade today. I'm going to make a lot of money. And what I found was that like watching the news was absolutely the worst thing that could happen to me, right? Because I was always late into a move or I was getting faded as soon as I would play it into it. And that's what I'm seeing these days is I'm seeing everybody late to the party on this. And it's funny because as doing what we do, we try to help people through our YouTube channels and everything else that we do through education. So we're trying to do the same thing. We're trying to look at the market and we're trying to say, okay, let's discount the news. Let's forget about the news because that's not going to help you. And so this is what the chart is saying. And I'll tell you what, I don't know about you, but I'm taking no end of the amount of shit from people online. Just like, what are you, stupid? Look at what's happening with the banks. Look at what's happening with interest rates. This is a guaranteed recession. You're living in a fantasy world. And I'm like, guys, I don't know what's going to happen tomorrow. I don't even know what's going to happen in the next 5 minutes. But all I know is, man, the market's had every opportunity to sell off over the last, what is it? It's 6 months now. We've been 6 months in this sort of grinding rally. And it has not. Every time. If you look at even today, in the last week, we've been coming down to 4,100, bam, 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 4,100. Unable to break through that.
Go back over it again right now today.
Yeah. So. And so it's like it's a very odd business that we're in, where we have to be, where it's almost like we have to take all the facts that we see and we have to say, market doesn't care, because all that matters is price, and only price pays. There's an expression out there, only price pays. So right now we're looking at this, and we'll look at the charts here in a second, but
well, the big mistake that people make, and it makes sense, but the big mistake that people make is they conflate the economy with the market. And they're two different things. You can have a tanking economy in a market that's ripping higher if the conditions are right. We saw that in 2020, right? We shut down everything. We shut down every small business on the block. We, basically had people stay in their homes. Nobody was working. And what did the market do? It ripped higher. Why? Because we printed a ton of money, right? And we propped it up and we fueled that into the system, and that just shot markets higher, right? That's what inflationary times will do to assets. Assets are going to go up, right? Well, market, that's what happens. And so the economy can be doing poorly and the market can be going higher. And so that's something that I think over the next 6 months, as we see what really will happen, because I think over the next 6 months, we will know whether we're going to have this recession or not, or be in it, right? And what that really looks like and stuff. We'll see if those conditions line up, right? If we get a recession where the Fed starts to cut rates, and we get a recession where, they turn and they do more QE like they just did the last few weeks. You want to know what fueled the market's recent rally? It's the Fed pumping another, $500 billion back into the market for the banks and everything, right? They basically stopped the whole quantitative easing in the last 6 months, 7 months of quantitative easing they've done. They threw back into the markets in a less than a week period.
Yeah,
so,
what if we're already in a recession right now? It's just that the numbers are so lagging that we would never know until 6 months from now. It's literally a joke that when I forget which organization actually declares the recession.
Well, it doesn't matter nowadays because the definition seems to be changed anytime that we're in one, right? We had 2 quarters of negative growth last year, but it wasn't a recession. Like, all we can do is look at what the conditions are you have to look at the Fed, because the Fed is a player. You have to look at the U.S. government, at least from a U.S. standpoint, because that's a player. If the U.S. government's going to continue to spend like drunken sailors, which we've been doing, and the Fed is going to continue to essentially kind of accommodate that. You haven't heard Powell come out once and say, hey, we need to stop spending so much because it's really hurting our ability to do our job and stop inflation, right? So, as long as that dichotomy is still there, and the Fed can only go so much higher, honestly, because if you're looking at the amount of interest on the national debt that's starting to have to get paid off, you're going to be approaching a point where you're spending 30, 40, 50% of tax revenue just on interest. So the Fed can only go so far. And so I think the market knows that. And the bond market's calling a bluff. The bond market's got rates going down later this year into early next year, right? So I think the markets are a forward-looking instrument. They're always trading on what they believe the future to be. Right now, there's certainty on what they think the future to be. Not much more from a rate hike standpoint, more accommodation from the Fed, right? The government's continuing to spend money. That's inflationary. Assets go up. That's what the market's seeing. So, yeah. Yeah,
I just wonder. And by the way, thank you for those of you that are joining us live, and more than likely, most of you will be watching us on a replay later on at some point, which is great. But we love to take questions during these sessions because we don't want to be just sitting here bloviating, about what we think. We'd like to hear what you guys think, and then that kind of sends the discussion into new directions. So for those of you that are online, if you have any questions or comments or anything like that, please stick your paw up and let us know. Just write into the chat room
section.
Yeah, or if you're watching this on a replay, just drop us a note through our support line and let us know what you'd like to see in the next one. So with that, I'm going to jump over here. I'm just going to look at the charts just for a second here. And here's I'm on the S&P 500 futures, which is, to me, this is the proper underlying for the full S&P market. So it's going to be a little bit different in pricing from the cash index. But notice how, the market leaves clues all over the place. Notice how over the last 4 days, we've come down 3 times to the 4,100 level. Bang, 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 bang. Even this morning to the same exact level and then just rebound like crazy from it. Now, it's been unable to get anywhere, and I think the reason for that is because of what you and I watch all the time, which is the market fractal. So we're looking at the energy of this, and we had this. What do? We did like, goodness, like a 200-point move, like in what, 5 days or something like that, an average of 40 points a day. Crazy, right? So that's going to drop this thing. If we look at this like a fuel gauge where it's full, and this is like beyond empty, like when you're driving your car, it says distance to empty, 0. I mean, this is where we had 0 on there. It's like, you expect to be pulling over the side of the road any second.
The car is starting to chug a little bit.
Yeah, and it's like you're looking for a downhill segment so you can get more gravity feed into your carburetor or whatever it is. So this is, and we anticipated this, we saw this, and it's like, okay, this is where we got aggressive with some of our strategies to say, hey, this thing's about to shut down. Let's go hit it really hard. Now, what we're going to see is these candles are going to drop off the back in the next 2 days. So right around the time that we get CPI coming in on Wednesday is when this thing is going to be back up. It just stopped for a little fuel stop here, and it's going to be right back up here again. Now, here's the thing. This is what I want all of you guys to watch for. So if you look at this as like a small little high and tight flag, and this is pretty close to what I was hoping to see.
This is what you were calling 2 weeks ago.
Yeah. So I said, I want to see a high and tight flag up here. This is pretty close to a high and tight flag. If you look at how the market has acted over the past several months. So let's go back and look at how the market has acted. Every time that we've seen some type of a flag like this, any kind of consolidation, we've seen false breakouts, and eventually it gets hauled back underwater. Just when it looks like the patient is going to make it, we haul him back underwater and he's gagging and sputtering. This was another one of these. Perfect bull flag up here at the beginning of February, until good old Jimmy Billard said, I got your 50 basis points right here. And he took us underwater, right? It's always the Fed. It's always something. So now we're setting up for the same exact thing again. Right at the same time that we got CPI, we've got Fed minutes on Wednesday, we've got PPI on Thursday. Will this break differently this time? Will it break in the direction that a bull market breaks, or will we go through the same crap again? That is what I want to look for this week. So here's the big difference I see in that right now for the last, as you've got those circled there. The last few times we've gotten a higher high. Right now we don't have a higher high. You notice this could be a higher or a lower high, right? So we could be, and that's where we could change back over. So that's why this is really, really critical where this decides to break, because it could have just been a rally in the midst of a, bear market, right? Just one of those nice rallies. In fact, I think it was between 2000 and 2003. I think I sent out a stat to Mastermind Group and you the other day. We were talking about the fact that there were like 18 NASDAQ rallies during that time of 20% or more, but it just kept going down over that time, right? So right now, we'll see where this ends up, but that's why it's so critical, because we didn't take out that previous high with this move. And if we don't now, and we roll over from here, well, then it could get ugly, because you've got a monthly chart and a weekly chart that have all the energy in the room to run that they want to go, and that's going to take you through the rest of the year if those release. So what I want all of you guys to look for out there is to see where we break from this week. It may not break this week. It should. We certainly have. We will have the energy to break by Wednesday, Thursday or so. So if we break, I'd like to see a break above 4,200. It may not happen this week. That's quite a move for a couple of days. But, I mean, we certainly did that last week. So break above 4,200, clears things, clears the decks. And, if you're not long, you're wrong. On the other hand, if we break down below, we could actually still break lower and still create a slingshot move from here. So we've seen
higher low.
we've seen that all the time, right? So that would create a higher low, higher high combination. A lot of times we see, markets break and they disappoint and the shorts load up and then the institutional longs say, thank you very much, I'll take it from here. And this is where we go, hunting to the upside. So that is like, if it breaks lower this week, as long as it holds 4,000, I'm okay with that, right? I'm okay with that. But we're going to know really soon, I think, what the intentions are for this market, because we've been in, like what we're talking about, 6 months of this higher highs and higher lows on the weekly chart. That's unprecedented. That's unprecedented for that to fail.
Yeah, looking at that weekly chart, we've really gone nowhere for the better part of 3 or 4 months. I mean, you just look at that W you got basically in the middle of that circle. Yeah. Basically, you've gone nowhere. We've just been going sideways in a channel.
Right. And so and
that's a big flag too.
Right. Of course, you could look at this and say, whoa, that's a head and shoulders pattern. You're just completing the right shoulder. You can see whatever you want to see in the charts. The charts will show you whatever you want to see in them. But yeah. This is actually called a Darvas box. What we're looking at here is there's actually, for those of you that don't know, there's a back in I think it was the 1950s, Nicholas Darvas used to be a retail investor. He would travel the world. He got paid to be a dancer, right? So that's back in the ballroom dancing days and stuff like that. He was a professional dancer. And so he was an investor too. And he would get cables coming in with price, and he would just simply use boxes on his charts to understand whether to not to buy, sell, hold, whatever he had to do. This is why, and I believe his book is called How I Made $2 Million in the Stock Market, which back in the 50s was a hell of a lot of money. Yeah. So it's simple price action things. Again, we're taking the news out of it. Nothing that we've said in the last 5 minutes has anything at all to do with the news other than the catalyst to change, right? If we come along and if we see a light CPI print, then we pretty much know the Fed's just about out of a job for at least a while here in terms of their hiking.
I think the thing on the print will be to watch core. There's some rumblings that core CPI is going to go up, where the full print could be a little bit lower, but core is going to rise. Core is what the Fed pays attention to. Yeah. I don't know if the markets are going to care, honestly. The way they're acting right now, I mean, if it comes in line or around there, I think the markets have already priced in what the Fed's going to do. So I don't know if the CPI is going to carry as much weight this time around.
Well, don't forget what happened back in October was the low print of the market in October was a bad, hot CPI print. So just because we get a hot CPI print, the market will look through that and say, well, it's probably the worst we're going to see. So let's buy. So
it'll be interesting to see how things end today, another hour in the markets or so. We'll see if the pros, remember the amateurs open the market, the pros close it. So amateurs open down. It's been steadily bought back somewhat to obviously to close to, within a few points of where it started, it seems like overall. So we'll see if we sell off into the end of the day, what the pros decide to do. That'll give us a little bit more sign of the sentiment going into the next couple days. I do see a couple comments. I'm going to call you A because it looks like it's just a YouTube name. But A, thank you so much for the comment. Thoughts on the current indices run? I think we just kind of discussed that. Ken, we do see you on there where you just want to test to see if it works. So if you have any questions, go ahead and send them our way. But yeah, I think we're just at one of those points again, one of those inflection points where we got to make a decision, and the market needs to make a decision. Are you going to go higher? Are you going to take out 4,200? Are you going to continue on and really, turn the corner into more of a bull, or are you going to, give it up, roll back over from here, and go try to print maybe the next low, maybe go back, try to test those lows from last fall. Right now, I think the higher side's favored, right? It just seems like it is. I think, bear markets weigh on people for a long time. And at this point, we've gotten through, we're over a year into it. They can last longer, but a lot of the weakest hands have been shaken out. So now it's left to the major players, and they seem to be in control of the upside, at least right now.
What have I heard? I think we mentioned this before, but I think one of the best quotes that I heard recently was, if 2022 didn't scare you out, then 2023 will wear you out.
Wear you out.
And that's
right?
exactly what's happening right now, is that people are being worn out because most people are aligned with positive drift. Most people are long investors. And it seems like every time it's like, every time we're ready to run, it's like, oh, psych, got you there. So it's going to be tough. And I've been through this before. You've been through this before. And the one thing I know is that at the bottom of every bull market, there is literally nobody on board willing to go for the trip, because usually when we get that capitulation moment, when we get that really truly ugly moment, people are just like beat up, they're bruised, they got black and blue marks all over them, and they're like, I can't do this anymore. And that's, and we're close there, man. We are so close to that attitude right now.
We just may not get the capitulation moment. It just may be ultimately the wear down over time to that moment, right? Usually you do see that big capitulation. The other side of it is, maybe we go on a run and it gets a lot of people, retail traders, to come off the street and throw money in because they think everything's fine now, and then the rug gets pulled out, right? So it's early to tell. We need to just see where this thing breaks, and then we'll have a better idea from there. I do see that we got a question. Any thoughts on the central bank digital dollars impact on the markets?
Oh, well, this one's
we
all
don't
you,
have
man.
it yet. We don't have it yet. Anybody that knows me, I love to stay on top of the big macro things and kind of stay ahead of where the future is going and stuff. So been talking about CBDC for a couple of years now, and all the underpinnings there. The Fed had the on its website in 2019. Everything was done for it, basically. So it's ready to go when they really want to do it. The Fed now is going to be kind of it's not the same thing. It is different, but Fed now is kind of the first, I think, trial run of transacting in a fashion like that. CBDC, it'll be interesting to see how they try to pull it off. Here's the thing I would say. A crisis is the best way to pull it off, right? So if you really want to institute a central bank digital currency, you need people so afraid that they'll do anything. They'll just, whatever you tell me to make things better again, I'll do it. I don't care. As long as, if it's going to be better and it's going to make, everything's going to, not be as scary, okay, I'll do it, right? That's kind of what you need. So I don't, maybe that's in the works. I don't know. So but CBDC has got you need a big event. A big event, and it would take much bigger than what we saw a few weeks ago. It would take a bigger banking event than like 2008 to basically make people so afraid of banks and so afraid of the transactional system as it is today that, we switch to the CBDC and give that up. So I urge anybody out there to do some real diligence on that and really look at it from both sides. There is the element of control there that is the issue, right? It's centralized. It's not decentralized like Bitcoin or any of the cryptocurrencies are. It is absolutely centralized. So it is very controllable. It is very easy to control a specific transaction. They know every transaction you make. Whoever basically has that database knows all of that, right? So if it's government run, you know what that means, right? So there's the apocalyptic view. There's the other side of that. And usually you probably are somewhere in between, but I don't think it's a great idea.
Hey, Dave, we've noticed that your donut consumption has gone up lately. So we think this is a really bad idea. And we need you to check this box that says, I acknowledge.
Look, it conceivably you could go to get gas in a gas-powered car, and if the government favors a much more green type environment and electric car environment, they could say we can't process this transaction because you've gotten too much gas in a period of time. That's what a centralized database in a centralized system allows you to do. It's programmable that way, right? It's programmable money. So again, that's why I said there's kind of that apocalyptic view of it that is absolutely possible. And, throughout time, governments have taken liberty with their powers. So you just have to keep that in check. Voting is a very important thing. A lot of states have actually instituted laws and are instituting laws to not allow that. to be in their state. Some states like Montana are actually making gold legal tender in the state. So I think in the United States, at least, I think the best thing to do is to look local and see what your state's doing, and vote there and focus there, because the ultimately the states are their own little laboratories of things, right? So I would focus there, and then that bubbles up to the government and everything as well. Doc, you want to take the next one? Ken had a question on the bearish side, the negativity that's out there.
Yeah, Ken is asking, so since many are so negative and bearish, do you think that the pain trade is likely for a short-term run-up before coming back down? Yeah, so what Ken is talking about, the pain, is the market will always move towards the pain. So think about it this way. If you're holding a long portfolio, which means that you're entirely 100% long delta, which means that the next point move has to go up for your portfolio to go up in value, right? So the pain trade in that case would be to the downside, right? If all of a sudden the market starts heading down, you're like, oh, wait. And you start to panic and just start selling things off. And this is what happens. It's the opposite of, just a panic trade. Opposite of a short squeeze. A short squeeze happens in exactly the opposite way. And we could see that. We could see a short squeeze with as many negative folks that are out there. I don't think it's as bad as it was maybe a month or so ago. I mean, it was extremely bad a month or so ago, and we've relieved a lot of that pressure with a 300-point rally. But still, I think there's a lot of disbelievers right now that their minds would be blown if we were to break above 4,200 right now. And that would cause at least a short-term, jump in price through there, as you got to squeeze out the rest of the shorts. And all of a sudden the longs are like, hey, wait a minute, you forgot to tell me about this party. And then they start jumping on board as well too. Is that, both Dave and I feel that we may have, if we do rally on something like that, it may be short-lived, right? Reality may come crashing down.
I think we've got some time through into May. And then from there is you get that debt ceiling debate is going to go down to the wire, and it's going to cause uncertainty. And there's going to be people on both sides politically jockeying and saying things out there that the markets are going to move off of either way. And it's just going to cause a lot of turmoil for a time. And you have the old adage, sell in May and go away, which is in people's minds and psyche. So people might just say, screw it. The S&P's rallied to 4,300. I'm taking profits. I'm getting out here. Right. And so that's why I just kind of say, I think we could see that rally into May, and then all bets are off as we get to the later half of May into early June. Then we get that done, and we go back to it again, right? And then usually July into August, we saw that last year. We get that rally that goes into early fall, and then we hit fall, and then it's a volatile time, and then we're back into that end of the year where we run high, right? Typically. So
2023 kind of cycle will wear you out.
Yep,
it will wear you out. So that's why we trade. We trade short-term strategies. We want to reduce our overnight risk as much as possible. All right, everybody. Well, thank you very much for attending. There's quite a group that's out there today, and hopefully there's a bunch of people watching this on the replay. We thank you again for your interest, and we seek to provide value here. So we're going to do this every week as long as we can pull a few people with us and go towards the light. So thanks again, everybody, for joining us. So on behalf of myself and from Dave Lukas, I'd like to wish you guys a great week, good success, and we are out of here. Thanks very much.
See you next Monday.
All right.
Bye.
See you guys. Super. All right.